Today, I'm sorry, I have to speak in English because my Spanish is only good in the evening with a glass of wine and a few tapas. It's not good in the morning. So we're here to talk about sustainable growth in banking environment, which is a big challenge. But one of the things that we're going to discuss today is about innovation. And especially here in Spain, one of the things that I really want to focus on is to make sure that we don't have innovation as a luxury. So Spanish banks over the past sort of 2 decades have been key innovators in the industry. But with the issues that we have in terms of economic growth and liquidity crisis, we have to make sure this doesn't become a luxury. So not a lot of time to talk about a very big subject. We have the big squeeze or the big chill, depending on how we want to look at it. And the reality is that we have a huge capital adequacy requirement with Basel III. So if we look at where our base capital was in 2010, this has massively shrunk. We've got about 400 billion in Europe that we have to find as institutions to be ensure that we're compliant to Basel III. So this is obviously going to put a few strain on the industry. One of the key things I think that we have to think about is post-crisis, the return on equity. So our profitability is massively dropping. It's a different environment. We're not going to see return on equity of double-digit figures anytime soon. So it's a new reality. We've gone from 16.7% pre-crisis in 2007, and the forecasts or estimates after Basel III is about 6 to 7%. And that profitability number is probably going to stay in single digits for quite a long time. So it's a very new environment, and we really have to focus on how we're going to compete. The other interesting thing as well at the moment, and I will spare you the details, obviously, of the issue of Spanish banks and capital adequacy and funding that we need to find going forward. But there's a couple of other things that are happening. The industry is forced to contract, so lots of mergers and acquisitions, obviously a lot of mergers here in Spain. But the other thing that's happening is that there's a lot of new entrants in the financial services sector, coming from retail, coming from data analytics. And the important message here is none of the Googles, none of the Tescos, none of the Corte Inglés, none of the Apple want to be banks. So these people are not trying to become banks necessarily. They don't want a banking license because it's very difficult, it's very regulated, and it's a real headache. What these people want is your data. They want information on your customers. And one of the fundamental things that's happening in the banking industry today is an erosion of our ownership of the customer. And that erosion is leading to us as a financial services sector becoming a commodity. And I think that's a real challenge for us. So the big squeeze, well, what's the consequences of the big squeeze is we have to reduce costs. So everywhere across Europe, not just here in Spain, and probably globally, what we're seeing is a reduction in costs, and the biggest reduction in cost is a reduction in people. I think there was an estimate that since last year only, around 160,000 people worldwide left the banking industry. That's quite a lot of people, and it's going to continue. And these job cuts have a real important factor, is that they are both happening in the business and the technology environment. And the problem of when it happens in a technology environment, which actually has been one of the key areas of cost reductions, is IT budget, IT people. It means that we're at greater risk. We're at greater risk of non-compliance, and we're at greater risk of IT outages, which I'll talk about a little bit later. The other thing that we're seeing as well is deleveraging of assets, so deleveraging of business. We're focusing on narrow banking. So a lot of the international business or a lot of the bank assurance business that we used to do maybe was not so profitable, maybe it's not seen as core business, maybe the regulators are asking us to reduce our impact there. So we have a big risk as well of losing market share. So a lot of challenges there. So at IDC and IDC Financial Insights, we try and look at what financial services institutions are going to prioritize over the next 12 months, and we call the IDC Predictions. And this is a cross-industry survey, heat map that we did with vertical markets. And there's a couple of things here that I would like to highlight, and they're a little bit difficult. So in terms of your priorities for 2013, one of the really important ones is regulation. I think for the financial services industry, we can't ignore regulation. But there's some positives as well. The other big factors at the moment is reducing operational costs and having greater IT organizational responsiveness. So at the same time, we're trying to balance cost reduction with operational effectiveness, which is going to be really challenging. Sensitive data protection over there is obviously a big concern, and it's related to compliance. And it's mostly to do with the fact that the European Data Protection Act reviewed, so Part 2, is putting a lot of responsibilities on organizations to ensure that they prevent data loss. And the European Data Protection Act is actually asking you, every organization with more than 250 employees, to have a chief data protection officer. And this is going to be a fundamental change because some of the fines and sanctions that come with data loss are very important. On the upside, on the growth and innovation, multi-channel strategies is probably going to be the area of innovation in our industry going forward. And it was a big priority compared to the rest of the vertical sectors. So in our predictions, we're looking at a couple of things, both the business and the technology priorities. And so there's a couple of things here which are really important. The technology side, what we call the third platform, is changing massively. What is changing? Well, in terms of mobility, we have about 7 billion devices connected to the internet worldwide, and we're counting. So this is PCs, laptops, mobiles, tablets, fridges, any sort of item is being connected to the internet. The other really important thing that we have is big data. We have about 1.8 zettabytes of data worldwide, and it's growing on an average of 60% a year. And the financial services sector is one of the biggest owner of big data because you deal with transactions every day and you deal with customer information every day. And then we have social business and really the evolution of the web. And the web is changing the way that we're doing business. It's changing also our culture, but it's also changing our brains. So there was a study that was done, especially in the younger generation, and the impact of the web on your brain. And I don't know how many of you, each time you asked a question that you don't know, go on Google or another browser and look for the answer, which means that we're having less connections in terms of this long-term memory, but we multitask a lot more. So we're actually changing the way that we're thinking and our brain is wired. So it's really important to think about that when we're doing financial services going forward. And the cloud is becoming a real tool, I think, in the financial services sector, and especially here in Spain, about trying to bring best practices and cost effectiveness. So this is all very well. So this is a technology that's changing your environment, but what does it mean in terms of business drivers? Well, the key areas that we're looking at in terms of business are really regulation in the financial services sector. We can't go away from it. Effectiveness of all your operations, and that will be mostly around automation of business processes. Channel proliferation, which is the key area of innovation, and infrastructure resilience, which I think is an increasingly important topic going forward. So regulation, very quickly. I'm not going to spend too much time, and I'm certainly not going to go into detail of this. But this is just to illustrate the complexity of the regulatory environment today. Just to give you an example, at Cybos, Citigroup said it spent every weekend, it did an average of 6,000 lines of code change in their core system just to be able to respond to new regulatory requirements. So a huge amount of complexity, which has a huge impact on your IT costs. One of the issues, I think, with regulation is we have to stop ticking the boxes. So we have to start being strategic about regulation and not tactical. One of the reasons why we can't be tactical is because of this. So a couple of years ago, probably about 10% of your IT budgets were sort of towards compliance and regulation. Today, on average, in financial services sector, around 25% of IT budgets are allocated for compliance, which if you think that probably about, in Spain, 45 to 50% of the IT budget is running the bank, there's very little left for growth and innovation and growing the business. So we really need to be a lot more strategic with the way that we do regulation. Regulation is asking us is transparency. That's all regulation is asking, really, is transparency of the decisions that we make. And fundamentally, when we need that greater transparency, we need much more in-depth analytics. So there's a couple of things that we're seeing here. One is a real focus on master data management, and it will be fundamental for regulatory compliance. And everything that you do in terms of your master data management is going to have an impact, or should have an impact, on growth. So if you have a better management of your data, you should have a better visibility of your risk, liquidity, decisions, and also of your customer, ultimately. So we need to improve data quality. We need to improve that, we need to make sure that the data that the CFO is looking at is the same as what the CRO is looking at. It might be obvious, but it's not that obvious, because after 2008, one of the biggest area of investment was around reconciliation. So reconciling what the chief risk officer and the chief financial officer looked and trying to make sure that they matched. So the data integration, the silos that we've built between our businesses, traditionally the CFO will be using one set of data, the CRO will probably be using a more complex model, algo sort of system, and this information is not necessarily integrated. Your retail business probably has a different database and data warehousing than your corporate business. So we really need to focus on that integration to have a better visibility. And finally, who is responsible for data within your organization? Do you have a chief data officer within your organization? Is he business or IT? Traditionally, data is the responsibility of IT. It needs to be the responsibility of business, because only the business understands what they're looking at. IT is just looking at lines or data sets. So the next really important thing, I think, is effectiveness. And I keep trying to take this slide off my presentations, but they keep coming back. We're still a paper-based environment in the financial services sector. And really what that means is that if you look internally, on that side of the business, well, what it means is that we have limited information access across the enterprise. So we have silos of data and information. We have fairly slow and inefficient and ineffective processes, because if you think that a lot of our processes are paper-based, there's risk of errors, there's risk of data loss, and there's a slow response time as well. To give you an example of a top UK bank, and I'm sure that here in Spain you don't do this, but this top UK bank had a very nice online banking front end, all singing and all dancing, very, very interesting. But it took them 2 weeks to respond to a customer in terms of decisioning, for example, a new loan. Because what happened is that the customer put all the information online, in digital format, and in the back end, the employees printed out the form and took it to the back office and filed it in papers, and they had to go through this manual process. So it had very long lead time. And there's a high risk of non-compliance when we do this, because from an audit trail, how do you sort of deal with non-paper-based processes? So increasingly, everything is digital. So for the customer, well, what does it mean? It means that we don't have a single view of the customer. It's not a holistic view. It's not a lifetime view of the customer on his products. We are slow in response, and we've got lack of channel integration, which is going to be increasingly important. And all of this is about data. And in the world of big data, there's a couple of changes that are really important. We're going from terabytes to petabytes within an institution. But the most important thing, I think, for the banking industry is that we're going from structured data to unstructured data. So all the communication that you're having with your customers today is increasingly unstructured. IM, email, sort of social media sort of interaction, voice. So a lot of the interactions are through voice calls. You have to be able to capture and audit this from a compliance perspective. The data velocity is increasing, but also what we need to make sure is that the data veracity, so how accurate that information is when we're dealing with big data is. So these are real big challenges. In terms of operational efficiencies, we've seen a resurgence in outsourcing. So outsourcing has gone through a couple of curves. It went out of fashion for a while. It's coming back in fashion because of the requirements for cost effectiveness and cost reduction. But one thing that is really maturing in the financial services sector, and in particular in Spain, which is peer-leading adoption of cloud computing, is really this move to cloud. But when we did a survey of why financial services sector thought they needed to take the cloud and what problems it was going to solve, was quite interesting. It's not all about cost and IT. So the top business reason was to deal with IT issues. Okay, that's fair enough. But the second one is about operational performance issues. So really the financial services sector is seeing the cloud as an enablement for best practice and operational effectiveness, especially in greenfield environment. And that's really quite interesting. And this is a bit of a busy slide to look at, but similarly, some of the top drivers for cloud adoption, the first two are to do with costs, so low monthly payments, pay only for what you use. But the next two are again about work process efficiencies, and we need to align IT services or business processes so that they're implemented more quickly. So really cloud is looking at that effectiveness. And also what we're seeing in the financial services industry, and if we look at cloud as software as a service, is an increasing number of verticalized software as a service solutions coming to market. So let's think about the innovation piece, and I'm not sure how I'm doing on my timing. Yeah, I have to hurry up. So this is the bit of innovation. This is the nice bit, and there's a couple of interesting facts here. So distribution environment is changing. It's becoming much more flexible, much more mobile, and we looked at a couple of statistics in Spain about consumer usage. You know, in Spain we have a large number of branches, which is very important, especially in small community environments. But we surveyed about 500 Spanish consumers, and some interesting facts came up. About 25% of the respondents said they used online banking 10 times or more, which means that in Spain, people are really embracing online banking, which is quite interesting. But at the same side, 32.5 Spanish consumers said they visited the branch at least once a month on a regular basis. So this complexity of the multi-channel strategies means that we have to provide the online, the mobile, but we still have a duty to provide this branch channel environment. The other thing is as well is social media. So social media is increasingly becoming a vector in the financial services sector to connect to your customers. And so in the same survey, we asked people, have you interacted with your bank over a social network? So have you said something to your bank or about your bank on Facebook, Twitter, etc.? And in Spain, about 56% of people had interacted with their bank. So it doesn't necessarily mean they were speaking to their bank, but they were saying something about the bank on the social networks. And at the same time, 64% of banks generally struggle to keep track of what is being said in the social media. Nevertheless, the financial services sector sees social media or social networking as a key priority for business going forward. And actually, there's some good news here in Spain. So if you think about those 56% of consumers who had interacted with their bank over social media, 30% of those said they did it over a bank-owned social media, so a Facebook page, group, or something that was in-house, which is far above any other European country. So if you look at UK, it's probably only about 10%. So this is good news because Spanish banks own that social media relationship. And now we have to start capturing the massive amount of information that this provides. So we really need to look at how we're going to use that data that we're capturing. So it's not just about a marketing effort or a brand effort. It has to be connected to our risk and fraud environment, because actually the big data analytics that social media provides will enable us to be more efficient as well in our risk modeling and our fraud modeling. And that's going to be a very important part of business going forward. So very quickly, mobile is another area of investment, especially here in in Spain and generally in Italy as well, and southern European countries. There's one thing that we have to look at, and again, this is from a consumer survey, that if you look at how happy people are with internet banking and mobile banking, one of the things that you're going to see is that in Spain, generally, most of the respondents thought that their online banking service was either excellent or very good. That's nice. But when we look at the majority of mobile users, and it's a much slower number of people who are doing mobile, they only rate it to okay or fair. And we really have to be careful that we don't try and replicate online banking on a smaller format. Geolocation, loyalty schemes, those are very important drivers for mobile banking. The other thing is I want to do a quick show of hands. How many of you have got an Android phone? Android phone? Yeah, quite a few. How many of you have got a malware software on their phone implemented? Okay. You might have to think about it. So the next big risk for the financial services sector is mobile malware. So similarly with online banking, where the fraudsters, the bad guys, they're going to mobile. And if you think about the information that you store in your phone, you really have to be careful. And 50% of all the Android malware that was out there was looking for customer data. So it's trying to get data is the important part. The case for NFC, there's a few projects here in Spain, and there's a lot of debate whether NFC is the way to go. There's an issue that there's no NFC phones anyway, so we have contactless card, we have NFC chip in mobile phones. The reality is at the moment is the mobile wallet is winning in Spain, 26 against 10%. It's about the same across the whole of Europe. It's mostly to do with infrastructure. In terms of mobile payments, we estimate by 2015 worldwide about 1 trillion mobile payments will be made, and that includes NFC and mobile wallets. It's quite interesting to know which direction we're going to go forward. So infrastructure resilience very quickly. There's no Spanish banks here for Spain. There was a couple of Spanish banks internationally who had IT outages. But this is a very small snapshot of what happened globally in 2011. 2012 was not a good year. It's been disastrous in the UK. I think nearly every single bank had an IT outage of some sort. And it's mostly a consequence of the reductions that we're making to our IT staff. So we have IT staff and IT operations that are increasingly under strain, one, because of the reduced budget, second, because of the number of new challenges that we're bringing to the environment with mobile, with online, with social media. So we really have to ensure that we have operational resilience, and it's very important because it's, again, a compliance area. So EBA governance does say that we have to ensure that our IT systems are resilient. And actually in the UK, the Financial Services Authority is actually thinking of fining banks who have IT outages and cannot say why there was a problem, and there's an increasing ownership. So key takeaways, and there'll be lots of things today that we'll be discussing around this presentation and live case studies, but what we need to focus on is simplification. We need to simplify our environment. We need to increase the focus on automation. We need to redesign our business processes to remove that paper. When we look at mobility, we have to look at security. So this is a key message that I'm going to leave you with, is mobility, whether it's internal or external, fantastic. It will give you loads of information about your customer, but make sure that you're not opening doors to your environment or to the customer data information. Services, well, there's a fundamental culture change. For the past decade, we've been competing on price. For the next decade, we'll be competing on service, customer service, and customer satisfaction. And the final thing is that when we're focusing on costs, that's all very well, but we need to focus on effectiveness, and we need to think about new delivery models. So I'm here all day, and we'll be giving out the presentation because I've been speaking very fast. But thank you very much, and I'll hand over to Rafael. A bit late.
Thank you, Rachel.